This lesson is part of the price action module dealing with support and resistance, and specifically how to actually mark your levels. So your foundation with price action and support resistance should always be horizontal SR levels. Levels across the chart that denote demand or supply, where people want to buy and where people want to sell. This lesson is going to cover the support and resistance, the foundation of it, and other lessons will build on that. But we're just going to talk about levels right now. From previous lessons, you will know why support and resistance forms, you know what supply and demand are, and you know that price moves through the path of least resistance to reach high probability liquidity areas. So we know why price moves, and we know conceptually why it reverses through supply and demand. But let's take it further and actually put it on a chart for you and show you how you set these up so that you can have levels that get respected when price visits them. First thing to note is that support and resistance is somewhat subjective. There are minor differences between exchanges in terms of price, and what one person calls support, another person might not. If we're talking just strictly about levels, if you're talking about a horizontal line across a chart with an exact dollar figure, it's going to get very subjective. So in future, I'll show you other ways where you can view support and resistance as zones, so it's more of a box or an area rather than just one fixed point. But for this, to even have a zone or an area, you must start with fixed points. You must start with single horizontal lines and build from there. So we're doing the foundations, so let's build from the foundations. Next thing, this is super important. Choose obvious levels. There's this misconception with trading that you need to do something that nobody else is doing if you're going to make money. A lot of people think that's what edge is. They think that edge is where you spot something that nobody else does. That's not edge. And when it comes to levels, you want to choose obvious levels. Why? Because if nobody else sees it, it doesn't have any value. At the end of the day, all we're doing is drawing lines on charts and hoping price respects them. So what that means is we're hoping that other people are drawing the same lines and that they are also trying to buy or sell when we are trying to buy or sell. That's how support and resistance are created, either through lines, through price levels, through whatever. Not everyone uses charts, but everyone at some point comes together and says there's more people and more aggression on the buying side than the selling side, so we reverse. It's really that simple. So don't try and overcomplicate it. Don't try and be too smart. Stick to your obvious levels. Next, high time frame. That's what HTF means. High time frame closes are the best support and resistance. Closes means a candle close, so excluding the wick. And high time frame in this case means it doesn't have to mean any specific time frame, but the higher the better, the higher the more relevant. So I don't really go beyond a monthly. And so to me, monthly close is the strongest. The next would be weekly, and then the next would be daily. That's kind of your standard. And those are the ones you want to base most of your opinion on. High time frame closes are the best support resistance, and you should start from the top and move your way down. Then there's some rules within that in terms of your high time frame levels. If the close, so let's imagine it's on a monthly, if the close precedes a large move, meaning that the following candle has little or no wick, then expect it to be strong on the retest. Not all levels are created equal. A monthly level, so you get a monthly close, and then you have the next month candle opens, and it immediately drops with no upper wick. You consider that to be very, very strong resistance if and when we trade back up to it. So one rule for a strong level is if the close comes before a large move up or down with little to no wick in the next candle. And don't worry, I'll show this on a chart in a second. Or another way of denoting a strong move is multiple closes at that level. So the strongest type of level you can have is one that has no retest on the next candle or multiple closes at that same level, because that shows the price is being respected. You want to consider these as well to be support resistance, as in SR. This is more down to when we're marking the chart, which we'll do in a second, rather than saying if it's above price, you're calling it a resistance, because that can lead you into a trap, which I'll show you in a sec. But just remember that I call them, and I think you should call them SR, support resistance, because they can be both, depending on where price goes. They're just key levels. If you want to use the word key level, that's okay too. Key level takes away any of the bias or any of the subjectivity about whether it's support or resistance. It's just a key level. A key level is one where price will react. So if that works for you, use that too. And it's important because to look at it as SR or key level, it just means that you can have a big reaction at the level, not that it automatically reverses. All right, so let me jump into the chart now, then we'll go back and cover the last few points. So here we have a monthly chart of Bitcoin. So I'm going to, from the start, chart these from highest time frame to lowest. So what are we looking for? We're looking to follow our rules. Remember rule 1. If there's a close, that then the following candle has a large move with very little upper wick or lower wick, you consider that to be a strong level. So on a monthly, the first one that jumps to my eye is this one here. The monthly close The next month, there is a tiny upper wick, but that's not a strong. You can consider that to be a very weak move up and a really strong down move. So whatever happened at this monthly close was very significant. This monthly close was a significant level. So when we come back to that level, expect it to also be significant. That's all we're doing here. And so we say monthly SR. Now what I'll say right away at this point, I'm going to put that in white, and I wanted to put this in red. Sorry, not white, black. At this point, really important to say, this is why I call it SR. So let's imagine hypothetically, price comes to this level and you're calling it a monthly resistance before it's even tested it. Your bias then is that this should cause a sell-off. But it's not a monthly resistance, it's a monthly key level. It's an SR. It's untested. So we don't know if it's support or resistance yet. You might say, well, of course it's resistance, we're below it. Not necessarily. We could be sitting here right now and then push way through it in a daily candle or a couple of days, and then pull back and it acts as support. So from the start, don't trip yourself up by calling these things support or resistance. You don't know that until price tests the level. Remember, the price is everything. This is just a red line on a chart that tells you where it's likely to have a strong reaction. A strong reaction can be a rejection, a reversal, or it can blast right through it and then suddenly become support. So that's important to note. That's why you should look at it as a key level or an SR, whatever way you want to call it. So let's now continue marking them. So there's a monthly, because it has been untested. That's a strong one. Let's go down. Let's look some more. Down here, we've got another strong one because we have a monthly close and then we come back down and we have another monthly close here. So we have two monthly closes, multiple closes that respect that level, multiple closes respecting the same level. Even though this doesn't close right on the line, you have to use a bit of discretion here. Don't be like in huge monthly candles. These minor differences of price are not significant. This is $200 difference of price on Bitcoin. That is a valid level, okay? So that's also considered a strong monthly SR. Looking below, see another one. This monthly close led to a strong move in the other direction with, look at it, no lower wick. Monthly SR. And where else have we got one? Up here, same again, monthly SR. As you can see, the price respects monthly close, comes back up, the wick holds, and then we have a close in that region. Again, similar to here, it's respecting that level. That level is holding. Doesn't have to close to the dollar. But you can see pretty clearly that because the wick was the top of this month and it closed in close proximity to it, that's a strong monthly level. So there's your monthlies, and that's everything I can see in view. Of course, you can continue on up. You can continue, whatever you want. But right now, for me personally, I would move now to the next time frame of my analysis, which is weekly. So we now go to a weekly, and we're looking at some key levels here. So what can we see right away? Well, we want to look at, what is one of the things we want to look for? Multiple closes. So here, close there, and close here. So I would say that level, this weekly close, and then this following weekly close here, and then close into the open. So you've got multiple weekly closes. So it's a weekly SR. And we can see the price came up, went through it, is now below it, and the wick of this current week is also below it. So that's a key weekly level. You can start to build that then upon, well, we have a monthly SR above, but how come we didn't reach it? Well, then you can say, look, we have a weekly resistance, which is now, we know that's a resistance. It's an SR, but we know it's resistance because it's rejected off of it, that we have to get through before we get to the monthly. So you can start to see that as you go down through the time frames, you get more recent, up-to-date data. If you're just looking at monthlies, you're waiting an entire month for every candle. But if you then see you're getting 4 of these every month, weekly candles on average, you can start to see things a bit faster. There's another weekly that I can see is here, really clean one. Weekly close, comes back up, weekly close again. So this is a weekly SR. And there are, by the way, there are many more of these. If you're looking at one just here, I'm not going to mark all of them, but let's see this other one. There's a weekly close into a weekly open with almost no down wick. So there's a weekly SR. And so what you're looking at is when price reaches these levels, expect a reaction that can be either strong move through it or acting as a reversal point. And look at the ones that are untested. These are all marked in red. So me personally, if I want to add more levels to this, if I want to have other weekly levels, let's say, an example would be this one. So this one, which I'm going to put in orange, was a strong weekly until it got tested. But then it got tested all the way down through, and then we pushed again. So to me, if I were to mark this one, I'd leave it in orange to say that it's not as strong as the red. That's just a personal preference. And it's also close to the other weekly, so that gives a bit more confidence that this area should provide some support if we come back down. You'd expect it to. The point is, if you want to denote them as stronger or less strong, then use different colors. That's all it means. And have rules for what's strong and what's not. So very simply, a strong weekly, or strong monthly, or a strong daily to me, is one that has had a strong move off the open and hasn't been retested. The example I gave before is the perfect example. Strong move right off the monthly open, not been retested. That makes it a strong level. There's going to be a lot of action whenever it hits there. And the second way would be multiple closes at that level, just like this one. Candle close, 2 separate months of closes denotes a pretty strong potential level. Then we go to the daily, and as you can imagine, it's just the same thing again. We keep going down through timeframes. But right now is where you get to the more actionable data that will probably be more relevant to you each day, because you'll hit daily levels probably every day or every couple of days. You might not hit a weekly level for several days. You might not hit a monthly level for several weeks. And as a day trader especially, you want to be looking at these daily levels. So what does that mean? Well, everyone looks at the wicks, and we're going to look at that in a future lesson on liquidity. But what matters is the candle closes. So what is the highest daily close of this rotation? It's up here. And so that becomes my daily SR. And then down here, we have the same, daily SR. Daily levels will rarely be in red if you're saying that they're strong. They're not going to be as strong as a weekly or a monthly, and you expect them to get hit more frequently. That's just how I do it. If you like to use colors and differentiate things, then go for it. If not, it doesn't matter. All that matters is that you're charting it and that you're watching it over time, and you're taking notes mentally or physically to see how does price respect levels. So let me preempt some questions that are going to come after students watch this lesson. You do not need to mark out all the levels and then come and ask me, are my levels good? Go back to the very first point I made. Support resistance is subjective, and choose obvious levels. If you follow that, you're fine. If you come and ask me, are my levels good? I'll just say to you, why did you do them? And test it. I'm just going to tell you to test it. What that means is mark them for a few days, a few weeks, a few months, whatever. Mark your levels and actually take notes and watch how does price react when it comes to the levels that you think are support and resistance. If you mark support and resistance wrong, not that there really is a true wrong way, but I'm sure you can get it really bad if you wanted to. Like if you tried to say that this is daily support, okay, obviously that's not daily support. It's in the middle of nowhere. So there are some very obvious ways to be wrong. But if you come and ask me and say, are my levels right? And I say yes or no, it doesn't help you as a trader. If you mark them and then wait for price to reach there and see how does it react, the market will tell you if you're right or not. So if your levels don't get respected, your levels are not accurate. The market isn't trying to fuck you over especially. The market isn't being cruel to you. Your levels are just wrong, okay? And that's not a bad thing. You have to learn somehow, but you'll learn better by doing it yourself, using this as a guide, and then seeing over time and updating your bias over time, updating your skills. So for clusters especially, clusters of closes, which is more common on the daily, then look for the lowest or highest close before any of the wicks. So that this is why I put it on the daily over the highest close, and any wicks that come after it, they're fine. They're just wicks. The closes are the strength. You have to get past the closes first before even worrying about the wicks. Because what you're doing with support and resistance, you're expecting price to not go through it. You're expecting it to hold. I know everyone in crypto likes to think that everything is like manipulation and everything is a stop hunt, where they're always expecting this to happen, but that's not the case. Support and resistance are supposed to hold first and foremost. That's the way you should view it first and foremost. The next lesson on liquidity will show you how to trade the other way, but first and foremost, support and resistance should hold if you've marked your levels correct. It should either hold or blast all the way through it and then flip. But either way, the level should be respected. So that's a quick one on the daily. And the current, whatever it is, month, week, or day matters because it's the difference between a green month, a green week, a green day, or a red one. So what do I mean by that? Well, let me take all this away, go to monthly. This level right here, which is the monthly open. So I'll say April open. This level matters because any point, it has to be the current month, at any point in April, if we trade down to this level, this green line, below that it becomes a red month. So it officially becomes a bearish seller dominated month. Above it, it becomes and remains a green month, buyer dominated. That's huge for the market, especially on higher time frames. That means we're either uptrending or downtrending. So all that matters to you is these opens, the open of the current month, will have a lot of interest of buying and selling. So if it comes down to that level and holds it and puts in some other pattern or other indicator that you need to get long, it's a great place to get long if it holds. Similarly, when you go into the weekly and you just look, the weekly open is your next level of interest like that. And you say, my weekly open. My weekly open matters as well, because if this goes below that, then it's a red week. A red week's bearish. That tells you something about the market. And so what matters is intra-month, intra-week, intra-day. Meaning, if it came down here before Sunday at midnight, it's interesting. But once we get to next week, if it comes back down, it's not so interesting. We're on to a new weekly candle. We're on to a new monthly. We're on to a new daily, whatever. And quite often you do see this on the daily. And for intraday traders, one of the key support resistance levels, maybe even the most important, is the daily open. Because daily candles, we get them all the time, every 24 hours, and they have a lot more movement in them. You can have a bunch of red and green candles within one weekly. You can have 7 of them. And the daily open each time, there's a battle every day of, are we going to finish green or are we going to finish red? So always watch your daily open. And that's it. It doesn't have to be more complicated than that. That's a great starting point for anyone who wants to actually mark support and resistance levels. And then doing it is about doing it. Actually do it. Mark the levels. Watch how it reacts. If consistently price doesn't respect your levels, then you need to relook at it and say, what are my rules for this? What am I considering a strong level, a weak level? And update your opinion on it. And if you're really struggling, come into the chat and ask me and say, Michael, I'm using weekly, monthly, weekly, and daily closes, but price isn't respecting it. And maybe it's on a different chart, not Bitcoin, a different coin. That could be something interesting. You say, okay, well, maybe this coin doesn't trade very technically towards support and resistance for whatever reason. That could be something to look into. But first, you have to do it. So, like I said, monthly open matters intra-month, weekly open matters intra-week, daily open matters intra-day, and support and resistance, rules of thumb, general rules. The first test is the best. The second test is good. That's how you confirm a level. But at 3 or more tests, you want to be watching for that level to actually break. Okay, so you have, let's say, I think there's a good example here. Yeah. So this level here, this monthly SR, monthly close, and a wick against it, confirmed as a strong resistance, right? We then trade down in the following month and blast all the way through it. That's because when you go and look on a lower time frame, on a weekly, we had this is the level, remember? This is the monthly level. We set the level, we retest it once, we retest it twice, we retest it even on a wick here 3 times. When you come back up, it goes right through. The more times you touch it, the more likely it is to break. And that's it. So in the next lesson, I'm going to take this further and look at the ends of those candles, the wicks, and talk about liquidity.